It's been a volatile market these past couple of days. So let's take ourselves away from the noise and focus on what we should focus on. It seems like the Fed is going to remain dovish and the economy has recovered very strongly. And in addition, there's going to be a $3 trillion stimulus package. That's a combination of a bunch of good things that we really should focus on. And we're seeing the market be volatile on the downside and then recovering very aggressively. So on a technical basis, on a market dynamic basis, it looks to me like there's a lot of panic selling, a lot of liquidation, a lot of people who feel fear and just sell, and a lot of people are feeling the same fear at the same time and selling very quickly. And that's what's causing the market to have this downward chop. But then there's also the fundamental bullishness, which is also occurring in the market and is, in my opinion, what should occur. And that sends the market back up. So it's a teetering between liquidation and panic sell and fundamental buying. And if you ask me, the panic selling and liquidation is not the right move. Those are people just saying something along the lines of, the market is very expensive and there's a lot of uncertainty ahead. And I'm not going to deny there is a lot of uncertainty ahead. It's possible that the economy or the market could take some sort of downturn that we're not expecting. But in the probabilities of outcomes, I think that is the least likely of outcomes because things like savings rates, at least in terms of the market, things like savings rates are at all-time highs. Vaccinations are going very well and better than expected, and people are getting them. The economy is going to reopen soon. People are going to be vaccinated. They're going to have record high savings rates, and they're going to be spending big time in the summer, giving the economy the boost it needs to get roughly back to where it was. We're not expecting a full recovery, but we're expecting something close, and then a full recovery within the next year or so. Maybe the end of next year and a half. In addition, we may be getting a $3 trillion stimulus package. Infrastructure stimulus package. This is good for jobs. This is good for spending. This is good for the economy. Not so good for taxes, but we'll talk about that in a sec. So, strong economic rebound on consumer spending and consumer savings rates, coupled with possibly additional stimulus, we could be in for a red-hot economy that is going to cause some inflation. And inflation is good for stocks. It's a lift all boats event. Inflation implies the rise of prices, which implies the rise of prices that companies sell. And if companies are selling goods and they're selling goods for higher prices, their earnings go up. That means stock prices go up. There's a lot of liquidity. People generally want to own stocks, and they don't want to own cash in this environment. They don't want to own bonds. And bonds, the bond market is bigger than the stock market. So expect people to continue leaving the bond market and coming to the stock market. And I believe the people selling are not supposed to be selling. Now, we don't want hyperinflation, right? We don't want this hardcore move. We want a gradual, calm inflation that, decreases the wealth gap a little bit, does a couple things, and boosts the economy and is a sign of a recovering economy. There will be some sort of, holding down of the hyperinflation force as well, because there's all of these positive forces, and that is taxes. Taxes, I'm not saying taxes are a good thing, but in a highly inflationary environment, taxes may be this is the right time to increase taxes. If there's ever a right time to increase taxes, I don't think there is, but it's in a highly inflationary environment. It's better than raising interest rates, putting on taxes. We need some sort of holding down of the upward economic forces. We can't have an economy that is booming too much, because then inflation really does get out of hand, things get out of control, and you don't want a booming economy. They had that in like the 70s and 80s, had to force a recession. They had to force a recession. We don't want to force a recession. We don't want to really jack up interest rates all the way, stop the spending and stop the borrowing. We'll just take some taxes, reallocate it back into the economy, close the wealth gap, do things like that. Good things that I think are things that we all want to see to some extent. And it seems like it's going to be a pretty good environment to me. So I would hold on through. I believe productivity is going to increase because of the infrastructure package. I don't want to see a tax increase, but if there's ever a time to do a tax increase, I guess it's now, and we will see what happens. So I expect the market to keep going up. I would use any panic selling as a time to add to positions you like or begin new positions you like, and don't sleep on the reopening stocks. So until next time, peace out.